Welcome to The Real Final Mile, life in big and bulky home delivery, the only podcast dedicated to the delivery professionals that bring your large consumer goods to your home. Welcome to The Real Final Mile podcast, life in big and bulky home delivery. Today, I'm honored to introduce Richard Purnell, a builder, operator, and one of the early leaders who helped shape what modern final mile and white glove delivery looks like. Richard co-founded Purnell Furniture Services back in 1979 and helped grow it from a small operation into a major player in the space, serving retailers, protecting brands in the home, and proving what disciplined execution looks like when the customer experience is on the line. After the company was acquired, he continued leading at the next level before retiring from that chapter. Now, Richard has taken that lifetime of business experience into a new mission through the Purnell Group, helping business owners think differently about long-term stability, especially the power of moving from tenant to owner when it comes to commercial real estate. This is going to be a conversation about leadership, risk, growth, and the real lessons you only learn when you've been in the field, in the warehouse, and in the boardroom. Richard, welcome to the show.
Thank you, John. Appreciate the opportunity.
Yeah, very honored, sir. As someone of my generation, you're a legend, and very just honored and blessed to have you here today.
I'm flattered. Thank you.
Yeah. So, Richard, I want to dive in to the early days, because you've got an interesting story, in my opinion, specifically from the perspective of work ethic. Somebody who was just ready to go at a very young age, to the point that you were ready to go before you were legally able to go. So could you start us off with how you got going through the use of a legal driver?
Okay. Well, the backstory is that my father had a retail furniture store. And he worked for the firm, and then in the last 5 years of their lease on the building, he owned the furniture store. So we grew up in a mom and pop, middle higher end retail furniture. Went to furniture markets, as kids with dad, and met a lot of the sales reps over the years. And he would, I remember, like sometimes bring the sales reps, the manufacturers reps, like just show up at dinner time and. Mom was a little surprised. Oh, we're having somebody to meet us tonight, huh? But anyway, so we grew up in the furniture business, and then what happened is that at his lease was up, a 20-year lease was up, and so the landlord comes in. It was in Northern Virginia, outside of DC, about 6-7 miles. And anyway, the landlord comes in and says, it's been 20 good years, but things have changed here, and we're going to cut your store in half, triple your rent. You're going to pay for all the improvements. And he basically, financially wasn't able to swing it. He was going to relocate his store, never did. Long story short, he ended up, liquidating his inventory and retired. So at that point, this was in the late 70s. So there were still a lot of mom and pop furniture stores out there. And he had kept one of his small delivery trucks. It was actually just a van. And I was a freshman in high school. My brother was a freshman in college. And so he called some of his local contemporaries that owned the furniture stores and said, hey, I'm retiring, but if you have any deliveries to do, I'm going to give the truck to the boys and, so they can make some money. So that's what we did. And then the segue into your story is that so when this was like this in the summertime when all this happened. So my brother was home from college, but then, in September he left, and we had started delivering for some interior designers and just little again, mom and pops. So the problem was that I wasn't going to get my license until the following April. So what I had to do was basically find guys to help me that could drive the truck. And I was with them, but I couldn't drive it. And, full disclosure, I would actually drive the truck to their house to pick them up, and then we would switch seats.
Yeah.
So that's how we started. And then,
I was going to ask about that, because I remember, when I was that age, there were plenty of times where I had to make the mission happen. So I jumped in, drove the truck anyway. So yeah, but I appreciate your integrity on that.
Thank you. So then, fast forward a few years, then just as a part-time business after school and weekends, and then whatever that, when my brother came back from college, he actually was on the 5-year plan. In 5 years, I had 3 trucks running, and I was going to school part-time then at the George Mason, taking some classes just part-time. And I never finished college. I took business classes, applied to my business, which was very helpful. So I retained a lot. But anyway, then the plan was for just get out of the delivery business. That was just something to make some money. And then my brother said, he majored in marketing. He said, you got 3 trucks running here. Maybe this could be a real business. And so I said, okay, let's try it. So we did. Yeah. So we bought a couple new trucks then. And then we're just a local, we were running, say, 10, 12 trucks, Washington, Baltimore market. And then in the early 90s is the next milestone when Crate and Barrel came into the Washington, D.C. market. And we got that contract. And we did a good job. And back then I dealt directly with Gordon Siegel, the founder of Crate and Barrel, cutting the deal and all that. And he, stressed the importance of, his mantra was quality, reputation, and style. So he said, we can sell it, but you're the last person my customers are going to see, so don't screw it up. And so basically we did a good job in DC, and then Crate and Barrel started expanding their furniture stores all across the country. And basically then Gordon came back to me and said, you guys are doing a good job in DC, but I don't want a different delivery service in every city. So if you want to keep DC, you have to take Atlanta and Dallas. So that was our fork in the road. Okay. And so once we did that, then we became, multi-market, multi-location operation. And then once, we never really had a marketing team. It was all word of mouth. And so then, other retailers would call, Pottery Barn, Restoration Hardware, a number of others, that Lazy Boy, Ethan Allen, etc. And they said, we were good enough for Crate and Barrel. You must be doing a good job. So basically Crate and Barrel was our anchor. And then we we ended up in 12 different markets from Massachusetts down to Florida. And we ran 2 models. One were hubs, where the merchandise came in after it was sold into our building, and we opened, prepped, delivered. And then we also ran some dedicated operations where we bumped the dock and just ran dispatch, routing, and in-home delivery. So then you fast forward now, it ended up being like 33 years later, where we were, we really focused on quality control growth. We weren't after, a lot of volume, and we stuck only with furniture. People said we were furniture snobs because they would call and say, can you do my appliances? I say, nope. How about, exercise equipment? Nope, not going to do it. We just do furniture. And so that limited us, but at the same time, that was our focus and our lane that we were in. And so we grew the business, and then our clients started asking us to expand geographically off the East Coast, to go to the Midwest, go to California, go to Colorado, et cetera. And, my work week in our business was, which I guess gets back to like the 1-minute management by wandering around. I was always in the field. I'd leave Tuesday, come home Thursday night, and either drive or fly. With that market we were in, within 5 hours, I could be at any dock. So we ran a hands-on operation, built a really good management crew, and kind of kept the family business feel, or not just feel, but we were family business, of course. My older brother, younger sister were involved as well. And so we were at another fork in the road where we said, we just really didn't want to do it. We started young, and we said this might be, we had double-digit profitability. We had no debt. We were doing well, and a good reputation. And so we decided to go ahead and sell the delivery business. But based back on my dad's story, we learned that if you can, it's easier said than done. But if we could own some of our buildings instead of just lease them all, which is what we did. So in the end, we owned 7 of the buildings. We had built 3 of them from scratch. And so we kept the real estate out of the deal, and we sold the delivery business. So my brother and sister retired after that. And then I stayed on with a successor company for a few years to I had all the client relationships just to transition.
I had a little surprise for you here. I've asked Jim Clark to join us briefly just to...
Oh, really?
Yeah.
Oh, wow.
So, Jim, I don't know if you can hear us, but if you can come off. There you go.
Hey, Jim, how you doing?
Good. How you doing, Richard?
Good. Jim and I met last year in Nashville.
I love listening to your story, Richard.
Thank you.
It's pretty exciting, and it's not a lot of people get excited about furniture delivery. So to meet somebody that was in it as long as you were and have the success that you have is pretty cool. John told me he was doing this podcast and asked me if I wanted to join in and say hi, and I was like, duh, yes, please.
That's fantastic. And I watched your podcast as well. So
awesome.
Yeah, very, very, very similar stories.
It is. The way you were just talking about, you could drive anywhere in 5 hours. That's exactly our radius. We finally have one that's a little outside of 5 hours, but yeah, it's pretty neat, pretty cool.
Good. Well, keep an eye on it.
All right.
As I know you do.
Yeah, I thought the timing was perfect, Jim, with you joining us. He was talking about being a furniture snob and not wanting to do appliances, and because that's Jim's model as well. Is he sticks to furniture, and obviously you saw the podcast. He for a while wasn't even doing anything but white glove and high end. So it is interesting to me just how paralleled your stories are. So that's kind of exciting.
And at the Furniture World conference that Jim and I met, Jim had one of his trucks there, and it was the same thing as a flashback. It's like, all the pads were folded, all the corners on one end. The truck, just in really good condition, and the dollies hanging up on the walls, and whatever. And so it was really, we were, what they say, twin brothers from a different mothers.
Just a few years apart. You were still doing deliveries when I first started. I saw your name all over the place. So now you're out, and I've been doing it for 30 years now, as John pointed out recently.
Wow.
Yeah.
Wow. So get past 33 and then you win.
All right. Perfect. I'm counting. So I just want to say thanks for letting me come in here and say hello. I'm really excited to.
That was a nice surprise. Good job, John.
To watch your podcast, and I can't wait for it to come out.
Okay. Thanks so much.
Thanks, John, for bringing me in.
Yeah. Thanks for joining, Jim. Who are some of your mentors and role models?
Well, there were a number of them. I remember we had early on, we had a CPA. His name was Dennis Donovan. And he always, he was kind of a glass half empty kind of guy. But he said, if you budget and you plan, always, plan for worst case scenarios when you put a budget together and when you even plan your strategy and growth for your business. Not that that's what you're going to plan on, but just have that as one. Don't think it's just going to be all fantastic. And that was a good lesson, because if you plan conservatively and then you exceed it, then it's you're better off for it. So that was one.
Good. Okay.
And then again, I got to say, like Joe Corey Sr., he was a good mentor, taught me a lot about the business. And I had an uncle, his name was John Sims. He was a transportation attorney. And it was back in when there was regulation in the transportation business, not just what we do, but buses and airplanes and all kind of freight business and all that he did. So he was a very good family friend of my dad's and our families, and so he was he spent a lot of time with me early on. And it's funny when you're getting started. Like, I remember a quick side story is that he did this all gratis. But he'd say, okay, we'll come over to my house at about, let's say on a Saturday, he'd say, we'll come over about 2:00 and then we'll have dinner. I said, that's kind of early for dinner. And then he said, yeah, but just come on over. And then he'd say, okay, I got some chores for you to do. Let's cut some wood, help me mow the grass, do this and this. So we bartered, really. Then we'd have dinner, and then about 7 o'clock, we finally got down to the thing that was just eating me up about something I wanted to talk to him about, the whole time. And then we finally, he gave me the business time, and then we went from there. So he was a great mentor as well. And I had other people too. There was a gentleman named Dan Likos. He had a chain of restaurants, and he was I grew up with his kids in high school. And then we had a furniture rep by the name of Bob DeYoung, American in Martinsville, who knew our families, and he helped a lot to open doors. And he got us into, we tried for a while I shouldn't say tried, we did hotel motel installations, and he would sell the furniture like a Marriott franchise, and then we would set up a special warehouse, and they were big jobs, 300-400 room hotels were, anyway, so he got us diversified a little bit there for a while, and so folks like that.
The finance mentor, just out of curiosity there, how big of an impact do you think that played on you becoming, what you are today, where you're helping other people get into their own buildings?
Well, again, I think, the big takeaway with Dennis was what I said. He was very detail oriented and process driven, and not just on the numbers, but just overall. So I think that's where he, instead of just winging it, he said, you really got to, document it, have your checklists, et cetera, in any business to do it well. And the home delivery business was a good application for checklists. You have so many steps along the way. It's just like a pilot in an airplane. You got to check this, flick that knob and this lever and all that. And the same thing with the distribution warehouse delivery business. There's the checklists are very long when you really get down to it. The thing is, with cross docks is, basically we got the furniture after it was sold. So we needed a lot of doors. Yeah. And we needed shallow bays. Like, for instance, Atlanta. If you want to lease 30,000 feet in Atlanta, you might get 3 doors. So we ended up, like in Atlanta, buying a piece of property, built a 35,000 foot warehouse, but we had like 18 doors, 4 inbound, and then the balance outbound. They had the shop in the middle. So, there was no way to get, it was all about doors. And you couldn't find a building for lease in some of those big distribution markets. They would suit us. And without the doors, it was, you had to have it. So that's really, in a way, that's also not only because of the economics, but just, from a process point of view, it was just, we had to build buildings sometimes. We did it 3 times in a market, different markets, to make our job better, or to do a better job.
And what cities are you still building buildings today?
No, we built them just for that purpose. Okay. And I don't consider myself, I'm not a developer. Even on the getting away from delivery business now, the only buildings I invest in are ones that are income producing and have tenants. Mm-hmm. You can show me a building I can buy 20 cents on the dollar that's empty, and I don't go there, because again, I'm focused on just tenant occupied buildings, and not to take the risk on speculation or development.
And what does the process look like for you today when you take someone and you walk them through the process of going from tenant to landlord?
Well, they come through a referral. So basically, I call, what I'm doing is they come from referrals. So usually a banker will call and say, listen, I've got this great customer. I can't get the loan approved for them to buy or build their own building. And so I come in and take a look at it. And sometimes and the reason they can't get it approved, it could be they don't have enough cash down to put down payment, credit score, maybe their business operation is not as profitable as the bank wants it to be. So they just need some help. So we'll discuss. Sometimes I'll just do a loan to help them, like with the down payment money. Mm-hmm. And I am admittedly getting premium rates for what I'm doing. But sometimes it's a loan, short term. Other times it's like an equity partner, where I'll say, let's just be 50-50 partners. You put in X dollars, I put in X dollars, and that way you don't have a loan. You only own half of it, but you don't have to make a payment, for the whole big amount. And we'll do it together. And then, but I tell them the goal is we want you as the owner of the business and the tenant to our LLC to own the building someday. and I'll stay in as long as I need to. But when you're ready, that's the goal, because it's going to change your life. Just like with me, you're selling delivery business is one thing, but those 7 buildings, are out all paid off. And it's like a whole different business and a whole different, from a wealth point of view too. I mean, it's incredible. And over, having those buildings for 20, 30 years, they've appreciated a lot. And so it's put us in a good position. I was in a group called Vistage. It's a CEO group. And it's one of these groups of, some of you may have heard of those, but it's like after YPO, Young Presidents Organization. We have to be thinking under 40, then you graduate into Vistage, which is different operations, but same kind of thing. You have a monthly meeting all day. You have a coach, and it's like you have speakers come in for the morning. Then you have like a round table. It's like having a board of directors, if you will, in the afternoons. And then once a month, the coach comes in and spends a couple hours with you, and you can talk about anything, business, personal, anything you want. But anyway, we had one speaker that came in that talked about self-limiting beliefs. And one of ours, through that process learned, one of our self-limiting beliefs was that, the furniture business, that the fourth quarter is always the biggest, Thanksgiving, Christmas, other holidays. And the first quarter is usually the slowest. So anyway, we lost money in the first quarter of every year. And so our self-limiting belief was that's just the cycle. You make more in the fourth quarter, you lose in the first, second, third, or in between, and that was the cycle. So I was challenged, and he challenged our management team. The coach, he said, "There's got to be a way to solve this." And I said at first, that's been going on for 10, 12 years now. That's how it is. So he said, "Nope, I'm not going to accept that." So I got with our management team and said, "Okay, we got a challenge here. We're going to figure out how to make the first quarter profit." So long story short, we did. And it was just through looking at everything, the different processes, without getting all the minutia of what we did, but we did it. And all the things we put in place to make that first quarter profitable translated into all the other quarters. So we ended up almost doubling our margins, not because of anything. There was no magic to it, or whatever you call it, silver bullet. Mm-hmm. It was just, we just got better at what we did. And the other thing we learned was what to keep track of. And, in business, you have all the data now, and especially more now than we used to. But I think that the trick was to focus just on like 3 things as an example that you look at every day. And but figuring what those 3 things are, it doesn't have to be 3, it could be whatever number, but not a lot. And like, for instance, when we first put it in place, like we wanted to see like the average revenue per truck. And these are not, secrets or anything, it's just basic stuff. But you got to keep track of it every day. Average revenue per truck by location. In the warehouses, how many pieces per man hour were we processing? And then the third one was, what time did the last truck get done at each facility? And because, obviously that's one that gets into the operation. If you have trucks that are, we always had the rule you couldn't deliver like before 8 a.m. or after 8 p.m. into a home. But usually we're done by, 4 or 5, but I'm just saying. But if you see a truck gets back at 9 o'clock at night, 10:30 at night, something's wrong. It could be an anomaly. There's weather, there's traffic, there was a bridge shut down or whatever. But a lot of times it was operationally something went wrong. And so we would really dive into that, and not like you can see with financial statements, you're looking at like quarterly statements a month after the 3-month quarter, right? So you're reacting to things that are 4 months old. In this case, we reacted daily, weekly. If we saw a problem, it was a flag. We had to get right on it, because if some facilities, those trucks, maybe not just one truck, 3 or 4 got in after 6 p.m. Something's wrong. We're overloading the trucks. We've got training issues. We've got whatever it is. But anyway, those are very simple things, but the execution of those consistently was just changed everything.
You were running this business, the furniture delivery business yourself, and building through Crate and Barrel and the others. What did you do better than your competitors that made the retailers trust you with their brand?
I think that we were, number one, we came, a lot of our management team too, we all had truck experience firsthand. So we weren't, coming out from nothing against education, of course. Education is very important. But, we weren't, we had hands-on experience. And a lot of people in the industry, quite honestly, that's not unique. If you look around a lot of the operations even today, a lot of those guys who, the first generation owners, almost all of them have been on the truck before at some point. They started that way. So I think that's it. The other thing was that controlled growth. Quality is what we were all about, and that we weren't chasing, the top line and how many trucks we had or bragging rights and all that. We really we did one, we did one, took on a new client, make sure they were happy. And we went as far on that subject is that we would go we get a large client, and I'd actually say to them, we're going to take this on, because they were concerned. Are you big enough to handle this? I said, I tell you what, we're going to give you all we got, and we will not take on another major retailer until you agree we're ready. And we meant it, because again, if we weren't satisfying them, then it wouldn't be smart anyway to go bite off another one. We'd be believing our own press clippings, if you will, and we don't want to do that. So, and then being transparent, I really did, our negotiations weren't with the client on pricing, renewal time. We were transparent. We'd come in and say, here's what we're doing, summary financials. We're not making money on this segment of it. And, if we're not making money, we're not going to be here 5 years from now. So we need more, higher rate. And this is why, fuel cost or labor cost or, whatever it is. But, so we're very transparent there. And again, we had great relationships and, with our clients. And, so that, I know I said consistency earlier, but that's, you think about it, it's not, what we did was not rocket science and all, to getting a sofa from, into someone's house, but it's doing it every day on time. And also one of the tricks too, I think, is motivating the teams, because it's kind of a monotonous job. Every day you're carrying stuff from this White House and you're delivering it and you're setting it up. And so you got to motivate. We had a lot of contests, like weekly, based on different things. Like we were having a problem, we'd say, okay, this week it's going to be on-time delivery. If we were having a problem with late deliveries or whatever. So this week we're going to put a pool together of, dollars, and each dock, whoever has the best on time, the best crew is going to get whatever. And we actually had, we called it WOW, What Outstanding Work contest. And we'd have envelopes, right? And they had between $5 and $100 bills in them. So every morning at the stand-up meetings, we were having we had like a mini contest every day. So, okay, yesterday, this crew did the best on-time delivery in my example. So they got to pick. You'd spread them out like cards, envelopes, and they picked. They could get 100 or they could get 5 in their envelope. But it was just a fun thing. And then at the end of the quarter or the month, whatever the thing was, they were bigger payouts. It usually was financial. Or sporting tickets or stuff like that. But trying to keep those guys motivated, because it's a slug, kind of business.
So Richard, when you hear white glove, what's the real standard to you?
White glove, and that's one thing I'll answer your question, of course, but that's gone away now, I think. But back in the day, white glove was the merchandise came into the warehouse, we opened, inspected everything, cardboard put in the baler, things got put on the dollies in our example, and then everything ran through the shop. It was almost like a car wash. It just went through, and maybe it never stopped. But there were a couple guys in there, depending on the size of the operation, looking at it and just doing little, like we didn't call them repairs or touch-ups. We called it enhancements. We enhanced the furniture. Yeah. Just as we don't want to say to somebody, if we repaired it, you're damaged, But so then it was making sure all the parts were there. We even like the dining room table. When I got it on the dock, the table was open, the leaves were put in to make sure they fit properly. The legs were put on, and a lot of times, you think back, it might have been overkill. We put the legs on, but to get on the truck, you got to take them back off. Right. So you don't deliver a dining room table with the legs on it. You got to take the legs off.
Right.
As an example. So then the responsibility goes to the drivers, the delivery teams, I should say, where they then had to inspect it again, because then they were responsible. They blanket wrapped it, put it on their truck. The other good thing with blanket wrapping, you can get more cube on a truck. Blanket wrapping, you can't cartons, but that's on the side. And then having the proper tools on the trucks. I mean, we were inspected toolboxes, weekly at a minimum. We had back to your thing about prep. So the guys had to have the right tools. You never, ask a customer, can I borrow a screwdriver or a wrench? That's like, no,
Mm-hmm.
we can't do that. So we always had to make sure our toolboxes were really over-equipped. And then you go in and you deliver the furniture, like we're delivering a china cabinet, you put the shelves in. And when we left the home, it was ready for use. You could have friends over for dinner, you could put the linens on the bed or whatever it is. And so to me, that was white glove, and that was the niche business that made it a niche business. And as that went away, like it got to the point where some clients would say, only open these certain SKUs, not everything else, and deliver the rest in the box. And and toward the end of the operation, that when we were in the business, the trucks came back full of cardboard. Back in the full prep days, the trucks came back like we were talking to Jim earlier. The pads were stacked. It was like you're ready for the next day.
Yeah,
that it got to be just. And then the guys get back and they weren't done. They had to unload all that cardboard. Then we had to cut it, put in the baler, so that to answer your question, that was white glove.
What's your philosophy on handling service recovery when the delivery went sideways and the customer's heated?
Well, one thing I'd say is that the best adjustment is the quickest one. And that's something that I read in the book by Stanley Marcus, Neiman and Marcus. That was their philosophy. The best solution is the quick one. Another thing we'd ask the customer, what will it take to satisfy you? And a lot of times you're surprised they want less than you think. It could be just to say you're sorry that I'm late, or they don't want you to, whatever, give them a new piece of furniture as an example. And the other thing was it empowered our crews to just take care of the problem. And even if we're going to go above and beyond something, and we don't even know if the retailer is going to reimburse it, because again, we didn't sell the furniture, we were delivering it. So but just take care of the problem. And if it meant coming back, like somebody wasn't home in their time frame, as an example, even though you could get a redelivery charge, which just it drives everybody crazy, we just went back and redelivered it, and if the client would pay redelivery, fine, but if not, we didn't ask the customer to pay it, of course. But things like that, just take care of the customer. And even if the client wasn't going to take care of what would cost us to do it, that's fine. But that sends a good message too to the client. I'm not going to pay that. And I said, okay, that's fine. Your customer's happy though.
Yeah.
And so we're happy. Next, so it kind of was a reverse psychology kind of thing.
What do you think changed more, the customer or the retailer?
I think the customer's expectations changed. And a lot of it came from, with the, I guess it started in the, 2000, early 2000s, when the online, like, remember we had the first furniture.com, sofas.com, the first time where it didn't work out. And it didn't work out because, as a side note, that because of reverse logistics, those companies they never thought about returns, and then ended up, that crushed them. I remember one time on the furniture.com that they had an office in Boston, and they didn't know what to do with returns. If you went to their office, there was like 50, 60 trailers all around parked in the office building lot because they didn't know what the heck to do with it, right?
Yeah.
And then, but anyway, that's another story. But then the customer, again, the margins changed. I can tell you the margins, like when my dad had a furniture store, 200%. I mean, it was huge, right? You buy a Lazy Boy chair, for $200, you sell it for $500, and if a customer walks in 3 years later and says something wrong, you Might give them a new one or give them one that costs, whatever. It's a whole different thing. And I think that now, if I'm dated here a little bit on my information, but I remember toward the end there that like the average margin in a furniture store was like 42%. So you got to get really efficient to, when your margins go down like that. And but the customer, like before, if we were delivering a high end, say a $5,000 dining room or $10,000 dining room table, the customer expected it to be blanket wrapped. And if you didn't, they were like, "What are you doing, bringing this box in my house?" But then, with the customer changed. They said, "You know what? To save 20% or whatever the number is on the price of the goods, I'll take it and get it delivered curbside to my house in the carton. Then I'll get my kids to put it together, or maybe a white glove delivery, if you will. Air quotes, white glove.
Yeah."
But then open the box, and then you have all that mess in the house or whatever, and nobody's ever seen it before. It could be cracked, it could be missing a part. So I think the success rate went down, for the first time deliveries. But to answer your question, the customer changed, but a lot of it was driven by the economics, and the retailer had to change. And I remember one of our clients did a program kind of at the onset of this. They call it factory fresh. They tried to sell the idea, and this was a higher end, not retailer, manufacturer, that nobody has seen this piece. It came right from the factory to your house, right? And you're the first one to see it. They tried to psychologically sell the no prep, and it was a complete disaster because their customers were not used to that. And again, there were more problems.
What's a belief that you held at 25 that you would respectfully argue with today?
I would have not envisioned ever a customer buying high-end quality furniture would agree to take it to deliver it in the carton. I would have never, not even thought about it. And the other thing is, I guess, well, we first started, and maybe I'm getting into another subject here, but that we had all company employees, and we never had a truck that was over 4 years old in our fleet. We had a plan to, we had equipment line of credit, so we could buy so many trucks every year, and other ones in. The trucks were, just perfect condition. They were clean, they were neat. Another big pet peeve was never have anything in the windshield. I'm kind of jumping around here now. So anyway, bids come back in. We're getting beat by 20%.
Wow.
On our rates. And I said, this is impossible. We don't make 20%. We make good margins. We didn't make 20%. I mean, net. And I said, how are these guys doing it? And we had all employee trucks in, independent contractors. So, so we had to ultimately change our model.
Yeah.
Not because we wanted to. Our guys, we had people, we hired them. They stayed with us, for their careers. They had a 401k, they had group hospitalization, they had everything. They had, leave. They had, again, really nice equipment. They had training. They had everything. And we were paying above market. That's, you could treat everybody well, but also you pay them well. Nobody ever left to go work for somebody else in the business because there's no way they could match what we were doing. And I shouldn't say no way, but that's, it happened very seldom. They might go to a different industry, but not to go to, that other flag down the street somewhere.
Right.
So, so then with the independent contractors come in, and I think a good way to summarize this is to say, when we sold our business, again, when I had all owned employees, owned trucks and employees, oldest truck 4 years. When we sold our business, the average age of a truck was 12 years old. They can't afford to buy new trucks.
Right.
They can't. And, and this may get some, negative feedback, but so our philosophy in the beginning was, if you take care of the customer, do a good job, that economics, money will take care of itself.
Yes.
That even on the surface, it sounds naive, but for the first, say, 15 years in our business, it was true. We just said, we're going to do a good job. And again, oh boy, we lost money on this. We'll go to the client and ask them for more money, and they gave it to us. right? Those days are gone.
Are there any people that you worked with that you're just exceptionally proud of that have just really taken it to a place you didn't realize they were going to go?
Yeah, a number of people. I mean, we had Bob Sampson, who has unfortunately passed away a few years ago. He really grew in the business. He became our VP of operations. But there's a number of them. And, a lot of even some of the delivery teams and all that still will call me on my birthday or, Father's Day or whatever, and vice versa. We still keep up, a group of us that just not deep, just say, hey, how you doing?
Yeah.
But as far as, I could go through the list of, of course, my brother, my sister, the different managers we had as well. Mark Hunt, we were in business 33 years and we had some 30-year employees. E.T. Haynes, James Green, E.T. Haynes, James Green, Rick Johnson, Rob Johnson. There was a lot of them. Dad, he was a relationship guy, and he was really involved in the Rotary Club, but we grew up, meeting and being involved with a lot of great families that he met through that, and he taught us how to do great relationships and to be respectful for everybody, from the whatever level person to the highest level, that we're all people, and it's just because somebody has a title, somebody doesn't, you don't think of them any differently, you don't act differently, you just treat them with respect and dignity. And my mom, she was she was frugal. She taught us really the value of a dollar and how to make dollars go further than the further they can. And her thing, she said, sometimes our business, when things are rolling, I'd come, we got this new client. She said, son, you're getting too big for your britches, or don't get too big for your britches. That kind of philosophy. It's always got to knock you back a minute and say, don't forget where you came from now. This is all good, but just, anyway. So, so that was a great family that we grew up in.
What do you hope people say about the Purnell way when you're not in the room?
We ran we were consistent, we were transparent, we had the integrity, and the family atmosphere that we kept up. We stayed in our lane with furniture only. In our conference room, this is another thing I learned at Vistage. In our conference room, we had a cover on one of the chairs in the conference room and meeting room, and it said, "This seat is reserved for our client and their point of view." Which is a visual thing, but it was there every senior management meeting we had. So we're sitting there talking about, what we want to do, and we're going to do this and this, and we'd always look at that chair and say, what would they say about this idea? What would our clients say? And again, a little thing, but powerful. And a big accomplishment, I think, is that we started about 10, 11 years ago, the National Home Delivery Association.
Yes, sir.
There were 10 of us, and Don Staniszewski was the lead on it. But it was we're a fragmented business, right? There's no banks or real estate companies. They have, national associations and places to go and get better and learn and network. There's none of that. And we'd go to these meetings, these logistic meetings every year, and they would talk about ocean freight, customs, all this stuff that we didn't really, care about that much. They would have one session on home delivery. And so we started talking at that meeting. It was IFTLC back in the day. Great meetings, great group. But we said, we're coming down here and we're not really helping, we're not talking about home delivery. So that's where the idea came from to start it. So we got together 10 founding companies, which I was one. And now, you know better than I do. At the last forum, we had 260 people there, and we've got, Bill's, our executive director, Bill Likos. He's got a women's council, a risk council, and he knows how to grow these nonprofit organizations and associations. And so that is unbelievable. The other thing, to our credit, I really thought when the merger started happening, the big companies like J.B. Hunt, Forward Air, Snyder, whoever else was buying up these delivery companies, Cardinal, that they they find value in organization and they've stayed. We thought they were going to buy up some of our members and that'd be it.
Yeah.
And that was my personal opinion in the beginning. But they said, this is fantastic. And they're supporting it in the vendors. Now we have, Enterprise Truck Rental, the insurance companies, and et cetera, our members. And it's just unbelievable how the thing has gotten legs. And then we have a foundation. We're giving scholarships. We have a leadership institute through High Point University. So it's just beyond my wildest dreams. But it was necessary, and it was something to be proud of, that I am proud of. I think we ended here on we didn't come out with a bang at the end here.
Well,
pause, 1, 2, 3.
Yeah.
It's like we were going, we crescendoed early.
Well, you'll be impressed with my editing skills. So, Richard, number one, I want to say thank you. I'm so grateful that you agreed to do this. But even more importantly, with allowing Jim to pop in and surprise you on the call, and just the time that you have taken to add value back to the generations who look up to you as the role model and who have modeled a lot of their businesses after you. I want to say thank you for them, because I look at guys like you and Patrick Corey and even Bill Lekos and say, what you've done and what you still have yet to do is what is the foundation of this industry. And in my opinion, I think we're working on some things that are going to bring some class, dignity, and respect back to Final Mile. And so anyway, I just want to say thank you, sir. I'm grateful.
If you deliver big stuff for a living, this is for you. Refrigerators, sofas, bedroom sets, treadmills, home gyms. You are the one who turns a tracking number into a real thing in someone's home. And whether anyone tells you this or not, you are the face of the brand the second that door opens. Now, here's the question. Are you walking into that home as just the delivery guys, or as trained professionals who know exactly what they are doing? Doolin Strategy Partners have been in logistics for about 30 years. We've seen a lot, but we are still learning on how to be better today than yesterday. Anyone who claims to know it all, steer clear of them. They are a claim waiting to be filed. Most drivers and helpers are thrown the keys, given an address, and told, figure it out. Figure out how to move a 400-pound fridge around a tight corner. Figure out how to deal with a frustrated customer. Figure out how to protect floors, walls, and your own back. That is not fair to you. And it's not safe either. Here is the good news. You can level up your skills, your confidence, and your value. That is where Get Doolin training for the Final Mile comes in. It's built for you, the people in the truck, not just the people in the office. We focus on the stuff that actually matters on the job. How to protect the customer's home, how to avoid damage, how to communicate like a pro, and how to represent yourself like a real professional, not just a driver. Here is why this matters for you. When you are trained and certified, you make fewer mistakes. You deal with less drama and fewer callbacks. Customers respect you more. Retailers and 3PLs see you as the crew they can count on. That is how you become the go-to team, the one they request, the one they keep, the one they pay. You already do the hard part. You lift, carry, climb stairs, deal with weather, traffic, and tight spaces. So why not get the credit and the confidence that comes with real training and certification? If you're not using Get Doolin yet, why not? You want access to training that is made for Final Mile delivery, not some generic motivational video that has nothing to do with what you do every day. You are not just delivery. You are the last mile, the final impression, the reason a customer says, "That was a great experience," or "Never again." So invest in your craft. Download the app. Get Doolin training for the Final Mile. It's not hard to find, and the value is clear. For your customers, for your company, and for you, the professional walking through that front door. Thank you for watching, and welcome to Get Doolin Training, the only platform out there listening to you and providing real training that adds value. Doolin Strategy Partners has you covered here.